Welcome back to our channel. In today's video, we'll be discussing a topic that can potentially save you money when it comes to filing taxes. Standard deduction versus itemized deduction. Which one saves you more? It's a common dilemma faced by taxpayers, but don't worry. We're here to break it down for you. So, grab your favorite snack, get comfortable, and let's dive in. When it comes to filing taxes in the United States, you have the option to choose between two deduction methods: the standard deduction and the itemized deduction. These methods can have a significant impact on your taxable income and the amount of tax you owe. Today, we'll explore the differences between these two options, their benefits, limitations, and factors to consider when making your decision. Let's start with the standard deduction. It's a fixed amount set by the Internal Revenue Service that taxpayers can subtract from their taxable income without needing additional documentation or proof of expenses. It's like a preset deduction available to most taxpayers. Claiming the standard deduction is straightforward. All you need to do is choose the standard deduction amount that corresponds to your filing status. The IRS updates these amounts annually to account for inflation. Once you've selected the appropriate standard deduction, it's subtracted from your adjusted gross income, resulting in a lower taxable income. The standard deduction offers several benefits. First and foremost, it provides simplicity. You don't have to worry about meticulous record keeping or gathering documentation for each expense. It saves you time and makes the tax filing process less daunting. Moreover, the standard deduction is available to all taxpayers, regardless of their expenses or financial situation. However, the standard deduction does have its limitations. In certain cases, itemizing deductions may result in a higher deduction for taxpayers, especially if they have significant expenses in specific categories. Additionally, the standard deduction doesn't account for certain expenses that may be eligible for deduction, such as medical expenses, mortgage interest, or charitable contributions. Now, let's turn our attention to the itemized deduction. Unlike the standard deduction, the itemized deduction allows you to deduct specific expenses you've incurred throughout the tax year. However, it requires detailed records and supporting documentation for each expense claimed. To claim itemized deductions, you'll need to itemize your expenses on Schedule A of your tax return. This involves categorizing individual expenses, such as medical expenses, state and local taxes, mortgage interest, charitable contributions, and more. The total amount of itemized deductions is then subtracted from your AGI, resulting in a lower taxable income. The itemized deduction offers some advantages. Firstly, it provides the potential for higher deductions. If you have substantial expenses in specific categories, itemizing can help you maximize your deductions. Secondly, it recognizes individual circumstances. Itemized deductions allow you to tailor your deductions based on your unique situation and expenses. However, itemizing deductions comes with its own set of limitations. It can be complex, requiring meticulous record keeping and additional documentation, which can be time-consuming and overwhelming for some taxpayers. Moreover, certain itemized deductions may be subject to limitations based on income levels and other factors, reducing their overall benefit for higher income individuals. Choosing between the standard deduction and itemized deduction depends on several factors. Firstly, consider the level of your expenses. Compare the total amount of eligible expenses to the standard deduction. If your expenses exceed the standard deduction, itemizing may result in a higher deduction. Secondly, evaluate the complexity involved. Is the additional benefit from itemizing worth the extra work? Lastly, consider eligibility for credits and exemptions, as some are only available when using the standard deduction. It's important to keep in mind that high-income individuals may face limitations on itemized deductions due to the alternative minimum tax or phase-out thresholds. Stay informed about changes to tax laws that may affect the standard deduction and itemized deduction amounts. Additionally, don't forget to consider state tax laws, as they may differ from federal tax laws regarding deductions. Remember, tax laws are subject to change, and the standard deduction and itemized deduction amounts can be adjusted annually. Stay updated with the latest IRS guidelines to make informed decisions about deductions. If you're unsure about which deduction to choose, consulting with a qualified tax professional is always a wise decision. They can provide personalized guidance based on your financial situation, helping you maximize your tax benefits. To sum it up, the choice between the standard deduction and itemized deduction can significantly impact your tax liability. The standard deduction offers simplicity and universality, while the itemized deduction allows for potentially higher deductions based on specific expenses. Consider your financial situation, the amount of eligible expenses, and the complexity of itemizing before making a decision. Stay informed about tax law changes and seek advice from tax professionals to make the most advantageous choice for your tax situation. And that wraps up our discussion on standard deduction versus itemized deduction. Remember, understanding your deductions can make a big difference in your tax return. If you found this video helpful, be sure to give it a thumbs up and subscribe to our channel for more valuable content. Thanks for watching and see you in the next video.